Okay, everybody, and welcome back. And we'll go on and wrap up with this news. Gold prices held steady on Tuesday, and we're seeing and just to reiterate, and what we were talking about, we have some people that came on. Um, we were looking at the technicals, which we generally do if you come on the first 10 minutes, um, and show you how this all works. Or I'm trying to put together, no one ever knows. I mean, we just try and do what best we can with probabilities. I told y'all that I thought that we could have been a lot lower in the Asian session. I thought that we would see some short coverage, and I told y'all I was looking for a return back to the trend line, which would be almost at 23.45. I said 23.42. Bad on me. I was off by 1.5 pips because it was 23.44. I said 23.42, 42.5. So I was off by 1.5 ticks. I said that we can rotate lower. And I said that would, as we were coming in the morning this morning, I said that would put the bid back in bonds. And you can see here the bonds moving higher. I had a gentleman ask me earlier. He was concerned because he's short the dollar yen. And I told him, I explained the same scenario to him and pointed out that this would in turn push the dollar yen lower. And I pointed out earlier, saying the dollar yen could be much higher, but obviously, like I said, we know that the dollar yen trades with an inverse relationship with the ZBs. So the ZBs are on the bid higher because now the SPOOs, which we were looking for a retracement to close to around 23.42 and a half, 42, got to 23.42, have done that. Now they're pulling back. So now as the ZBs go on the bid, the euro goes weaker, and then in here. You can see here where the gold moves higher as we got to that 50%. So let's go on and move back into the story. So gold prices held steady on Tuesday as investors looked to see if Trump would be able to enact his promised tax cuts and infrastructure spending, with the dollar drifting slightly higher off multi-lows. The markets are now starting to settle down as concerns around the implication of the failed healthcare bill seems to have been somewhat abated, said ANZ analyst Daniel Hines. We're likely to see gold prices relatively steady for now until there's a little bit more clarity on Trump's other policies, particularly over the tax bill. Trump suffered a major reversal when Republican leaders pulled legislation to overhaul the U.S. healthcare system. The blow would nerve financial markets, heightening worries about the chances of enacting tax reforms and big spending packages. The likely upper limit for gold would be at the 1260 per ounce level over the next couple of weeks. Hines said, adding that the precious metal would struggle to break through its 200-day average, now at 1259. Gold has already rallied sharply from its March 15th low, following a less hawkish than expected policy statement from the U.S. Federal Reserve, which dampened expectations for near-term increases in the U.S. interest rate. Gold is highly sensitive to rising U.S. interest rates, which increase the opportunity of a cost of holding non-yielding bullion while boosting the price in the dollar in which it's priced. The markets also took a stock of separate statements from Fed officials on Monday, with Chicago Fed's Charles Evans saying the case for 4 rate hikes this year is not yet solid and will require a stronger lift in inflation. We remain constructive about gold in the short term, international FC Stone currency analyst Edward Mars said, adding that further weakness in the dollar could push the gold higher. The dollar limped off multi-month lows against the major peers on Tuesday. Meanwhile, the world's largest gold-backed exchange-traded fund, the Spiders, reported an inflow of 2.7 tons on Monday. And other metals, spot silver fell 0.2 to 18.03. And to wrap up, we'll look up here at the crude. Saudi and Russia are likely to discover that when pursuing two incompatible goals, the one deemed less important will ultimately be sacrificed. The world's two top oil exporters appear to be chasing both higher crude prices to the curbs of production and market share by increasing exports, at least in Asia, the world's biggest crude importing region, as fastest growing. The question is, which of these goals will ultimately be abandoned in favor of the other, and how long will it take for Saudi and Russia to realize the incompatibility of their dual ambitions? The crude import data from Asia's biggest buyers show the scale of the challenge facing Saudi and Russia, the two countries that are the linchpins of the November agreement between the OPEC. That agreement, which provided an initial boost to crude prices, may be extended for another 6 months after ministers from OPEC and non-OPEC agreed on March 26 to agree to conduct a review. While OPEC and its allies have had success in ensuring high compliance with the deal, which has started the process of drawing from global oil inventories, they've also opened the door to other producers. Chinese customs data, while February's imports were down from the same month in 2016, they're actually up 1.18 million barrels per day. China imported for the kingdom in January. It's also disturbing for OPEC and its allies to look at the 64.8 surge in China's imports from Brazil. And India's imports of crude from Brazil jumped 176.2% in the first 2 months of the year to 139,300. It's more of a mixed picture from exporters, partly to the November agreement with India's imports from Saudi down 15.2%. What the crude price import numbers from China and India for the first 2 months show is that by and large, top producers seem reluctant to cut supplies to major Asian buyers, even if they do, other producers are willing to step in to cover the breach. The U.S. exported around 950,000 million barrels per day in February, according to participants in industry who spoke at Argus Crude's forum in Singapore. The U.S. shale industry is still the sword of Damocles hanging over the head of OPEC and its allies. While the agreement to curb output may have some impact insofar as drawing down the excess inventories, perhaps it'd be better for Saudi, Russia, and other hopes for stronger world economic growth to spark a demand-led rebalancing. We'll go and finish up right here. It says, and I thought some interesting, we talked about the Euro Swiss before, I thought we'd just take a look at this, so the dollar's bouncing back a bit from yesterday's bashing. With the exception of the British pound, it is surprisingly strong too relative to the other dollars, the Canadian, Australian, New Zealand dollars, and that surprises us a bit. We began by looking to Europe, and we note that the IFO business index for March reported out yesterday was modestly stronger than we had and others expected. The index was 111 last month, and the consensus going into yesterday's report was for 111. It was instead 112. Adding to this good news was the IFO's report on current economic conditions in Germany, which rose to 119 from 118. As far as is our norm, we round the numbers such as those to the nearest whole number. But it's the bigger picture. Finally, the IFO's report on expectations rose from 104 to 106. So the news looking back, looking at the present and looking forward was good news across the board. We were and are impressed. However, the euro is not that impressed, apparently. For if it were, the euro would be gaining sharply and consistently among the Swiss franc, and clearly is not doing so. As we write, the euro-Swiss cross remains barely above 107, with the Swiss National Bank doing what it can, and indeed what. See, let's go.
Hey, Paul.
Yes.
Pauly.
Yeah.
I don't know what just happened, but in the last couple minutes, the ES has taken a dive.
Yeah. Let me go. I explained it to everybody, and I don't know why they missed it. Let me. I'll take you. I
may have popped in a little late and missed what you said.
Okay. Let me explain to you, and I already covered it twice this morning. So yesterday, remember we were talking about on the ES. And what I was telling people, I'm going to bring up the ES again. I said, when the news came out, one of the things that I was looking at was that had they had the vote on Thursday, I said it would have been just terrible for the market. But because they didn't have the vote, they didn't get the vote, but it looked like we weren't going to get it, that the market had 2 days to digest that. And so I was saying on Monday, I go, we could have been a lot lower in Asia. We could have been in single digits. And I was talking in the Sunday night session. I said, a lot of people are thinking, wow, I thought we'd have been at 2309, maybe even 2312. You know what? I may need to cover some of my shorts. So one of the things I pointed out yesterday, I said, I would look for a rebound that would take us back to this trend line. And I said, I'm looking, it's probably going to be around 23.45, but I'm looking at 23.42, 42 and a half. Well, let's take a look at what that high was. It was 23.44. So I was off 1.5 ticks or right. 2 ticks tops. What I told people was at that point, and I said that when I came in this morning, because we were still up here, I said, we're probably going to rotate lower. And I was telling people, watch, you're going to start to see the bonds go on the bid as we rotate lower. So I was telling people is what we're probably going to see is we're going to have to test right here at 23.28 right here to see what they're made of. So I said with the bonds, you're going to get the bonds to move higher. And then I pointed out the yen would move the dollar yen, because I had a gentleman ask me, he was concerned because he was short the dollar yen. And I was explaining to him, I go, look, did you see my thing on the and I put the spoosh chart on the WizeTrade alerts. And I pointed out, I go, look, he was worried because the dollar yen was trading at 110.60, and I go, did you see my charts? I go, we're going to probably work lower because the ZBs work higher, because the euro, the SPOOs go lower, the ZBs are going to go on the bid. So now the dollar yen's 20 lower. And then I pointed to I just pointed out just right before you came on, I pointed that this in turn, because the ZBs are going higher, that would aid the gold, which went right down to the pip, to the 50% retracement, which I pointed out to some people in the European session, and look where we're at right now. So that's why the SPOOs are rotating lower, is because they did that retrace. And that once you got up to that retrace, who's left to go in and buy? But I said yesterday, people were probably going to say, wow, it could have been worse. You know what? This is a good place to go in and cover. Maybe I better go in and cover my shorts. So that's why we're seeing that pullback. We're into some support here on the SPOOs. If you look at the SPOOs right now, and we'll go back into that. If you look at the SPOOs here, we've got some support here. That was the old support there. You see that? Notice how they bounce off 23.35? But my guess is they're going to have to come down here to 23.28 before they get, and if they can hold this, then we can work a little bit higher. But like I said, that's where that bounce came back to the trend line and back to this 23.45, but it's actually 23.44 was the high, and we're looking for 23.42.
Gotcha. Okay, cool.
Okay,
thanks, man.
Let's take a look. Let's go back into, we'll finish up here because we were talking about the Euro Swiss. Yeah, Rod says, yes, you did. And he said already showing up in bonds. So let's just go and finish up right here, because like I said, it's been a relatively quiet day. We've seen the SPOOs, like I said, react here, but we're bounced off that 23.35, which is our old support. Not old support, but we had it from last week. So they're talking about the Swiss franc. It says to keep the franc weak relative to the euro, we paid heed to the cross and call attention to it for the past several weeks. Actually, been calling attention to it for the past couple of months. As we draw attention here this morning, we see it as a barometer of the weather in continental Europe. As the cross weakens, it tells the story of informed money quietly but inexorably leaving the rest of the continent and looking for safer harbors. Once again, that kind of questions, like I said, you would think that the euro probably on this return rally might have to come back, and we'll probably have to test like the lower 18s there. We'll, as far as looking out today, we said turning then to economic news of the day. Here in the States, yesterday, Dallas Fed's survey came in at a good deal better than they expected, rising to 19 for March. And the more broadly important general activity index, however, was a disappointment, for it was at 24 last month. Okay, and so let's go and move into the 2-hour charts and into the bias chart. And like I said, generally what we'll do is, like you'll see that we spend a little bit more extra time in the news. What I generally will do is, if the market's relatively quiet, and we've already seen, I mean, obviously we saw what happened, you know, in the SPOOs. They're rotating lower. It looked like they're starting to sell, but not a whole lot. They're just rotating lower, and in turn, and we'll pull that back up and we'll jump right into the 2-hour FX. But if you're here early in the morning, in the first 10 minutes, we covered the technicals across the board. And so we had already covered this. And actually, this is the third time we're covering it. But you can see here, this is what we're looking for. We're looking for, and I said that yesterday. I told y'all, I said 23.45 is up in here, but it's 23.42, 42 and a half. And like I told you, I was off 1.5 ticks. So all we're doing is, this is our level that we already had from last week. That's why I even posted this chart on Twitter. But this chart was posted in the WizeTrade alerts this morning with commentary. Hang on one moment. I'll even read you the commentary on that. Is it this one? No, that's a gold chart. Hold on. Here's my commentary. And this is on the SPOOs. It went out on the, yeah, Rod says, I like what you do. With the overview before starting the day. Everyone should be able to draw their own straight lines. Uh, okay, so this went out to the WizeTrade alerts. I said yesterday on the webinar, we talked about a return to the trend line, approximately 2342. See if we see a reaction in other markets now that we have the retracement. Because now that you get the retracement, we got the retracement. Make sure everybody's all on the same page. This is what we were talking about yesterday. I put it on the WizeTrade alerts this morning at 3:30 in the morning. I think it is Central Standard Time. So that's what I'm saying right here. I say, yesterday on the webinar, we talked about a return to the trend line, approximately 2342. We actually got to 2344. See if we see a reaction in other markets now that we have the retracement. Well, the retracement would be because now that we got the retracement, you would rotate lower. Thus, you would get, which we've done, you would get the bid in the bonds. So we were what, 1508? You got the bid all the way back up to 1521. And we'll go into the buys chart and I'll show you how that worked in the dollar yen, which trades an inverse relationship to the bonds. Went higher and the dollar yen went lower because it trades as an inverse relationship. When we came on, we were right there. I think it was 1060, 1062. So it'd come off 20 pips. The dollar yen could be a whole heck of a lot higher. Could have had a snapback. I mean, a real nice rally, which would have probably taken us to like, let's say 111, and maybe even a little bit higher, maybe 1115. But it shows you that the dollar yen, which is a safe haven asset, is still cognizant of where things are with the SPOOs. It's like, you know what? They saw, which is what I told that gentleman that was asking me about the yen. And let's see right here. I told him a pullback from this expected retrace will allow a bid back in the ZBs. That would in turn likely pressure the dollar yen, which trades with an inverse relationship to the ZBs. Dollar yen could be much higher. It knows there's still danger in the murky waters. I messaged that to him at 5:56 in the morning, 4 minutes before we started the Morning Edge webinar. And you already saw what happened with the bonds and how the yen has gone lower. So let's go on and move in here with the euro and get this. Let's kick this bias chart stuff up. So there was our resistance yesterday, 903. The high in the euro was 906. The reason I kept it limited, because you see here, this analysis has been here for a week, almost 2 weeks or a week and a half. I said, the current move is now set to test the 859. Did we test? Yesterday we tested 859. The top of the zone with an eventual finish at 959. But now we got to 859. We even skunked out the 868 or whatever. Now we can start to rotate a little bit lower. But we're not giving up the ghost yet. So let's move this on. But it's relatively quiet trading. But that's why we got to that 903. So that's why the market is still, we talked about that. You had to look at, for those people that got long down here and they're holding for above 109, maybe a squeeze to 110. Those people aren't getting the heck out of Dodge anytime soon yet. That's what I'm saying. All this time here, when we kept rotating from 815, we never took out this. Remember, our level was 762 on the daily chart, and I'll go back there so that everybody's on the same page. Like I said, it's a super quiet session. When it's quiet, you'll see me spend a lot more time covering news and a lot more time covering analysis. Down more time, slow day. But remember, we had this area here, and it was all about this 762. Remember? And now it's how the market came up. Y'all remember here, you're here every day. And once we got above it, and we came above 108, look how they never took out 762 on the close. So technically speaking, This market is still open to eventually go to 924. Doesn't mean we won't come down here and fill this little area here. But I'm saying is don't expect this market to turn around and just start going south of the border just because we got above 109. Can we pull back for retracement? Yes. But like I said, we're still, technically speaking, it wants to still go high. Yeah, LB says, yes, you absolutely did and saved me a buck as I flattened my dollar yen at 10.59 for a small loss. Thanks big time. Oh, so he was getting long the dollar yen. Okay, I thought he was getting frustrated that it would go lower. Yeah, so he took a small loss. Yep, he said he got long the dollar yen. And yeah, that's what I was saying is we should be a whole heck of a lot higher than that. I mean, we could. That's what I'm saying. We could be a whole heck of a lot higher than the dollar yen, but it doesn't believe. It knows where the SPOOs are, and the SPOOs are going to have to do some work. And just because we saw some short covering doesn't mean that we're out of the as I call it, out of the murky waters yet. So let's go back in here and let's get back into the chart. So let's see what we hear on the euro. So could the euro at this point, it's still the key area is where we were, this 903. Could we launch higher? Yeah, anything's possible. So what we're going to do is we're going to look at the bigger scheme here, and that's here, this 934, which is a 61%. Now we're looking bigger picture. So what if this takes another leg up? This is where I would expect it to have trouble at. And actually this level I think is 930, 932, and 934 is a 61%. Of the entire move of, this is the November high, November election night high, right there, 1301, and the low down here at 340. You see where we're at? Right there, the 61%. So we're going to use that now on a bigger picture scale as our resistance. I think the market's still susceptible to come down here and test the 8. We might even go single digits, like 808, something like that. But on a bigger picture scale, we're going to have to use that, keep that, because we're not, the market's not giving up the ghost yet. So we're going to go with the bigger picture look, which is 934. And we're going to go in and it's 816, but we're going to give it a little extra stretch. We're going to say 808. This is our little bit bigger picture outlook across the board. Now let's go move into the cable. We got down up here, we got past the 78%. We talked about, could it get up there? There was a possibility, but like I said, it was really, really stretched. And you can see as we came with the test of 25.98, again, it ran out of gas, we're working lower. For right now, we're gonna say, this is your resistance, 25.98. So we'll tighten it up a bit. That was at 26.8, if they could squeeze it even higher, because we were at the time above 25.98. So we're gonna go back to 25.98 and then support. I think we did already have that marked off. And I'll probably stay with that 24.72 for a little bit of a pullback. And I think we're going to go in and stay with that here. That 24.72 really stretched here. And now we're going to get clipping along. So now we're flying along. We're going to go into the Aussie. Look where the Aussie came back. We had 75.90. Look where there we were to the 75.90. Because it's starting to weaken lower. Once again, we're not out of the woods yet. Everybody's still questioning, hey, you know what, maybe the reflation trade's over. People don't flip on a dime. I mean, it's not like, okay, well, we saw a nice rebound in the SPOOs, and people are still saying, you know what, maybe this inflation trade is run out of gas for right now. And we talked about that with last week when we said, we'll probably get a rebound. We'll get some rebounds here and there with the SPOOs, but eventually I don't think that people are going to come back to really buy the SPOOs until we get closer to 22.75. Doesn't mean we won't get rebounds, just like we saw yesterday when we saw, like I said, as the market could have been a lot worse on Sunday night. Now the market started to rotate lower. So that was our support, which is 75.90, which confluence with the 61%. Can we move lower? We're going to go with this. Right now we've already hit support here, but let's, once again, bigger picture. let's go here on the bigger picture outlook and say 75.44. Actually, we'll go 75.48 because this thing is really starting to weaken now. So support's going to be 75.48. And let's look at, it's starting to get to a point where it may get bearish. Resistance is going to be 76.53. And it's range, but it's getting ready to get into a point where it's going to be starting to turn bearish. So that that gets us to the first break. And we get back, we'll go in and cover the Kiwi. Here's what Garmin was talking about this Euro switch. You see how it continues to remain weak? So what Garmin was saying is, and like I said, a lot of people, give him a hard time because maybe he gets long crude at the wrong time or whatever. But his overall analysis is pretty doggone good. One of the things he's pointing at, which is a little bit concerning, that's why I think that potentially we'll probably come back down here to this 815, 808 area here, is that what he's saying is the euro, right before we go to break, let's take a look. So we had a pretty nice run up, but I think this has obviously a lot to do with the euro. I'm not going to say it's not because we talked about this. We talked about how, remember for the last month when we had those unbelievable PMIs, not the ones we just had last week, but from a month ago, which were the best PMIs in 5 years. Now we just had the ones just last week and they're the best ones in 6 years. But we talked about how the euro was holding up really well, positively diverging from the dollar when the dollar was way up there, even though the euro comprises 56% of the cash dollar index. But look how well the euro's done. I think the euro's done pretty phenomenal. He was kind of saying, well, it could have been even done more. Well, I don't know how much more you want out of it. That being said, what his concern is, he's saying the internals show that even though the euro's gotten better, what he's saying, he uses this as a barometer check of continental Europe, saying people are quietly leaving the theater, essentially. Like, you know what, I'm going to leave right now. I'm going to get the heck out, get out right now, but I'm going to leave my seat very quietly. So he's saying people are just getting out, using those opportunities in the euro rallies just to get out of their euros. And that's why he's saying, look how the Swiss franc continues to remain strong, because this is euro versus the Swiss franc. So if we lose this, it's really going to be, you want to keep an eye on this real quick. If we lose this 682 area here. But it's time for a break. And we'll be back. And thanks for joining us here on the Morning Edge webinar.